Today, I'm going to be talking to you about building a financially secured family. What does it take to build a financially secured family here in Canada? Hi there, my name is Dotun Afouda, your licensed insurance advisor based out of Ottawa, Ontario, Canada. Many people often think this is something complicated, but building a financially secured family essentially requires you to put three things in place. Only three things. Once you have these three things in place, you can consider your family to be financially secured because your family would be able to withstand any unexpected events financially. Now, let's look at these three things we're talking about. Number one, you have to make sure your family or the income earners in the family have adequate protection. This is the first, and this must be the foundation. Adequate protection means they have adequate life insurance protection, adequate critical illness protection, and adequate disability insurance protection. For most people who are working full time, your employer would usually give you a very good disability insurance package, which covers up to 80% of your income if you are ever disabled or can't work because of a long-term disability. So most people usually don't have to work about that. But if you are a contractor, if you are a business owner, if you make your income as a contractor, or you own a business or you run a business, you need to get disability insurance for yourself. Because what happens if you have an injury and you fall and you can't go to work? The the employment insurance payment, you wouldn't even get employment insurance payment because you're a contractor and you're a business owner. So you need to have an adequate long-term disability insurance for yourself if you are a contractor or a business owner. Now let's look at the other two. Your employer's life insurance policy will never be enough. It will never be adequate. Your employer's critical illness protection will never be adequate. So you need to get your own private protection. And getting your own private protection is easy. You just need to work with an advisor like myself to ensure that you have adequate life protection. Now let's assume you've gotten adequate life protection. Step two. This is the step most people skip. You need to have an emergency fund for your family. Very important. An emergency fund is simply 3 to 6 months of your family's core expenses saved up, put aside in case of emergencies. So let's say, for example, your family's core expenses, and when I say core expenses, I'm referring to expenses that you must make whether your family gets an income or not. That is expenses towards your housing, maybe your car, your bills, and your insurance payments, because also you don't want to lose your insurance payments simply because you don't have income. So all this forms your expense, your core expenses. Let's say it comes to $5,000 a month. That tells you that your minimum emergency fund should be $15,000 a month because it covers for 3 months of your family's core expenses, or 30,000, or from 15,000 to 30,000, but it should not be more than $30,000 a month because that is 6 months of your family's core emergency. And that money should not be invested. That money should not be put into any business deal. That money should not be used as down payment to buy a property or used to get a business opportunity. No, that is not what that money is for. That money is there in case of emergency. Emergencies being, one, you lose your income, you get laid off, or your family lose one form of income or the other. Your family would be financially secured for at least 3 to 6 months. Or two, you have an actual emergency. You need to travel home and you need to spend $2,000 or $3,000, or you have a fender bender and it will cost you $2,000, or you have some form of emergency and you need quick cash. This is the point where most people get into credit card debt. But if you have a family emergency, it protects you from getting into credit card debt, and also it protects you from liquidating your investment or liquidating your assets in order to meet emergencies. So that's step 2. You don't skip step 2. You build your family's emergency fund. Step 3, which is the final step, is you ensure that at least 10% of your income is invested towards your retirement. Retirement investing is a long-term investment strategy. So you ensure that at least 10% of your income is invested towards your retirement, because you will actually live long. When you arrive at age 65 and you have paid your bills and the kids are out, that retirement income is what will pay you in retirement and ensure that you don't face financial difficulty in your old age, or you don't have to keep working because you can't meet your financial responsibilities. So you ensure that you invest 10%, minimum 10% of your income towards your retirement. So if you can follow these 3 steps, you have adequate protection, you have emergency fund for your family, and you are investing towards your retirement. It means that regardless of what happens, whether it's a death in the family or a critical illness like cancer in the family, or an accident, or you actually live long to age 65, regardless of what happens, your family's financial health will not be affected, and you would have built a financially secured family. So don't skip any of these 3 steps. Ensure that you build a financially secured family, because that will bring you the greatest joy. If you have questions, leave them in the comments. I'll be happy to answer your questions. And if you want to connect with me directly, you can use the link in my bio to connect with me, and we'll have more discussions around this. So don't forget to like, subscribe, and share. I hope you have found this video useful. Till next time, stay glued to my channel.